Welcome to TradeTheNBA.com. This is John's reports for the 6th of October. Well, there was lots of excitement because Donald Trump got out of the hospital, and that meant that there was going to be stabilization, and that got a lot of people excited. In fact, we moved above the 50% off the ES from this slow build. We've had this gentle rise in the DOC red. A lot of just back and forth here, though, from midterm and shorts. Nothing really great to speak of. What led to a lot of just the consolidation softness was no short-term buyers in steel. We had the buy setup from the power mode 2 cross and the improved shakeout, but we had rolled back over. So we're creating effectively a P2 pivot, meaning a well, in fact, you're seeing a P2 right there, which is also the red DOC rising. You kind of see a similar effect from the shakeout, and nothing too exorbitant here from a power mode 2 standpoint. Normally you would want to see expansion in that for really big moves to the upside, but in this particular case we're just kind of like neutral from that standpoint. But certainly the market prefers clarity and knowing that the president is back at the White House, and that certainly means that there's not going to be any policy shakeup. I was asked on the Skype chat, it's not a political thing as far as preferring one or another. The market just prefers stability, and the known is better than the unknown. And so that's literally all that is. It's not about choosing any individual, because politics does matter, particularly when it comes to the stimulus, the likelihood of it. This is why polls are watched so closely in that, because all of those things impact people. And, in this particular case, from Congress' standpoint, if they feel that it's hurting them in their races that a stimulus hasn't passed, I guarantee you that a stimulus will get passed and you'll see a turnaround. And that could happen, at any point that scale becomes too heavy. So from an NQ standpoint, it's already been better than the S&P. It's been well above the 50% back and forth here. Then the other day, closed right back above it again. Still, nothing to write home about from a shakeout standpoint until that histogram starts to improve. But I'm sure for a lot of people, that was a welcome saving grace. And again, this is where you get those institutional buyers always come in around that 50% range, because it's just a classic move to the 100, retrace to the 50, and then you start to build from there. And as long as there's no new selling pressure, you get that move that heads back up. And that's where you get the concept of those ABC, up, back 50%, and then back up again. And that's just the classic from that play. From a gold standpoint, it's a steady build, and it's going to continue because as inflation builds into the liquidity. Now, in this particular case, a unique dynamic that we haven't seen before, where you've provided a lot of liquidity to people merely to sustain what was earned income as a replacement. So it doesn't have the same inflationary power that if you were just throwing low rates at people, and if there was free mobility and everybody was allowed to move about, I think you'd see a lot of wage pressure as well as inflation. But until that happens, this inconsistency of openings, and that you still have a lot of people struggling in that, and as long as that's the case, it meets demand. It meets the capability of demand, really, which is a kind of slightly different concept of you could want things, but if you don't have a job and resources to do it, there's nothing you can do. And so that's kind of where things are at. And from an oil standpoint, it's detrimental because, again, as long as people are working from home and that you really don't have the necessary draw of gasoline and oil in order to really maintain really what they were shooting for is that 50 price range, and they've just been unable to get there, and it's simply because there just hasn't been enough reopening. From an intraday standpoint, it was just an easy ride. I mean, we started off with our buy setups here, cyan under red. We had a couple of little soft points, but every time we turn around, and I was pointing out on the Skype chat, I'm working on the second half of the green dotted line. This is where we have our long algo turnaround. At the same time, we've already had a power mode 2 buy cross along with the DOC buy cross all at the same time. And what I'm thinking of having also is a secondary one of the short algo that will form the top half of the dotted line. So this goes from 50% to 0. We'll have it go from 50 to 100 when it completes that. It's sort of like giving you the all green kind of concept of go. Plus, I'll be able to, even from a short side, put up a cautionary tale on the short aspect of it. Because again, this is one of those where in a rising long algo and short algo, short's not likely to be as strong, but when they start to flatten out over a period of, X bars, which in this case for a 5K chart, usually is about 4 or 5. That's when you start to get the potential for greater retraces. In this case, we get the DOC spread along with the softening power mo and certainly a much lower shakeout on higher highs in relationship. And that gave us the 50% retrace, but then the turnaround move didn't take very long. I mean, literally you had the first inclination right there. That's the yellow dotted line. And then it was confirmed with the turnaround in the algo and all of that just straight off the 50%. And then it was just a straight up move, and boom, that just took us right up to the highs. And these were really good ranges. We ended up with a few positive extremes. The most notable being right here at the low of 33.88. Let's just go ahead and put our horizontal line in there. That way we can all look at it and see if it gets retraced. Oh, what a shock. It does. Isn't that amazing how beautiful that works? So there it is. From your upside move, once the short signal came in, and we were talking about this just as it was taking place, and sure enough, as it broke down, boom, right to the 50%. Well, it turned out to be a rising 50% that was coming up from here, but returns to the 50%, finds support with DOC in that, and then boom, pops right back up to the 100. Now, also, that situation is really soft here because it's on a much lower shakeout, again, as we reach the highs, so we could see a little bit more fade back first before any new configuration. If we look at it from a Power Mode 2 standpoint, similar construct, and someone was asking the difference between the Power Mode 2, as you can see, DOC Power Mode 2 cross. What this is really identifying is the similar situations where we would have what we would consider a strong buy configuration. It's not so much worried about the sell aspect. I just merely put in the general parameters for sell so that at least it would turn red, so that every time you'd see green, you'd be able to recognize where the program is reading the potential for new buys. And pretty consistent to what we're seeing from that DOC, because I had already put that language going across. But that's the difference between I use this as my experimental mode to really get a read, whereas the Diocon Paint treats these, relatively speaking, as kind of a trade complex going up. When I make some of these additional adjustments based off the short algo, and that you won't have some of these minor interruptions where we're just looking at like neutral breakdowns where you could just be like, because you're so close to the red, you get a little up and back and forth. When I look at DOC spreads, I look for more this configuration where you get a strong decline in your red, you get that beautiful separation, and it's just it's a clean, as opposed to just a flat lining. And besides, this never violated APM green and things like that. It was just a softening move off of what was this positive extreme right there to fill it, and that's all it did in that particular case. So that was another thing I was pointing out too, making sure that you don't put your stops when trailing at where a positive extreme would be. So for instance, we had this one right here off of the green. It's like, well, I know that's going to get filled back, so I'm not necessarily looking to jump into the long until I get a little bit of my pullback for that, to make sure that it's still in rising DOC red and all of that, because I know that I'm going to get a fill back in there off the exuberance. So that depends on if you're playing multiple contracts too, because certainly you could take the early one knowing that you'd be able to average it if there was the immediate decline, because it is possible that you can get that kind of pump that just continues to roll, and then you'd be like, I was waiting for the positive extreme retrace and it just didn't happen. Then that is possible. So those are alternatives. It depends on how many contracts you're using. In our case, I've been using just the one contract example just to show the continued effectiveness intraday, that you don't always have to take every single trade, but the vast majority of them, and most of them have been longs. We've just only had a few shorts, but there were more of those the other day, which was more on the short side. So all in all, great stuff. Don't want to go too long here, but put any additional items up on the Skype chat. Trade well.